Here is episode 2 of these setup series of basically how I trade some of the stocks that are mentioned in the Stats of Trading email and on the website. Link in the description below for both those products. One of the members of the Discord room was just like, I want to know kind of how you manage these things as they go, because what I don't do and what I kind of don't believe in is a signal service where I say buy here, sell here, buy here, sell here, right? You should take the ideas I give and make them your own, kind of based off what's going on. So this one was FTNT. Basically, I was looking at it like this when it was setting up. The basic idea, this is one of the setups that I use and that I like a lot, is you look for a stock that kind of puts in a nice range after earnings. You can see the earnings date is right on this gap up. So gapped up on earnings shows me that whoever studies the fundamentals, say there's positive fundamentals here, we started to chop sideways. So as always, I'm looking for a close. I do all of my swing trading on the close because you can see it's kind of wicked up in this range a few times. So I wanted to see a close over that range. We got this on this candle. Now, in this market where the SPY is kind of stuck in a range, and we can take a look at that here, and even back in March when I took this trade, it was kind of in this range right here, just kind of stuck between this high and this low. And we're in a bear market, I'm very, very quick on profits, right? So this is something that you'll kind of see change. If we ever get into a bull market, I really want to get more out of my trades. But for now, it's about, taking whatever I can and surviving. So we entered on this candle as we closed above this prior high. Stop, worst case for me is just right below this range right here. Now, if you are someone who wants to trade wide, the low of this range probably makes sense. But again, for me, even if we close below my trigger candle, I would probably get out and then look for another trade. You're in the market where everything's choppy, so you have to be tight. So came in through here. A couple days later, I believe on this red candle right here, we gapped up and we just put in this tight range. I took half of my trade off right there. And if we kind of run what this looks like with this stop loss tool or this risk management tool on, using the low of these candles right here, and then we pull this back, right, roughly a 1-for-1, right, 0.8 or so. So roughly a 1-to-1 risk reward, which is what I'm after on that first bit of position. So now if I get stopped out on the second half of this position, then it's a break-even trade, right? So as soon as my risk is off the table, it just makes me breathe better in this kind of position. And now I'm just using, and in most cases, I'm using the 8 exponential moving average. No power there. I've heard people use a 13, a 10, a 20. But in pretty much all cases, you get about the same results, give or take, right? It's just how quickly you want to be out of the market, and I want to be out of the market a lot in this kind of bear market until we start kind of pushing new highs. So you can see we didn't get a close below. That's why I'm always interested in the closing price. Charles Dow taught us that was the most important price. A close below this 8 EMA until pretty much right here. I remember I didn't close on this day because I'm looking at it, and I'm like, if you squint, maybe it's a close below, but I really didn't want to mess with it. But right here on this candle close is where I got out, chopped sideways for a few days, and then kind of fell apart. So on the second half of this trade, if we do the same thing and we use our risk right here, still nothing crazy, right? 1.5 on the second half. So you average that out, it's, maybe a 1.25 or so reward. But again, I'm going to just pick random trades, whether they were good, whether they were bad, whether they were instant stop outs, or whether they were amazing, just to show that I have a rules-based approach for my exit. Now, these rules, again, will change if the market ever turns into a bull market. Maybe I'll use a longer-term moving average, or maybe I'll use an ATR stop or something wider to give them more room, but we're just not in the market environment where I feel like it makes sense to give more room. So hope this helps. I'll see you in the next one.